So, does everyone remember when the malls were going to die and retail was going to be no more and everything was just going to be e-commerce forever and ever and ever? Well, it turns out that might not be the case. One of my favorite real estate stocks to cover is Tanger Factory Outlet Centers. Not just because I'm a customer, there's a couple of them in my state, but because it's a really good retail business. And they just reported earnings, and that definitely confirms that idea. Tyler Crowe's joining me. He's a Tanger shareholder as well. I believe you're still a shareholder, Tyler, right?
I am.
All right. So before we dive in, ticker symbol is SKT. It comes from the founder's initials, Stephen K. Tanger. And before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So let me just kind of quickly give you an overview of Tanger. It's been around for over 40 years. They primarily own outlet centers. They have 42 properties, mostly in what I would call touristy areas. Yeah, I live in South Carolina. There's one in Myrtle Beach. There's one in Charleston. There's one on Hilton Head Island. The touristy areas. There's a lot in the Northeast. I grew up in New Jersey. There's a Tanger Outlets in Atlantic City. There's a bunch of different, along the coast, along, the Gulf Coast. These are outlet malls, and they're the closest thing to a pure play outlet REIT that's in the market. They're not the market leader. That is Simon's Premium Outlets, but that's part of the greater Simon ecosystem, and Tanger is just kind of a standalone outlet company. Now, retail is really kind of making a comeback, and Tyler's going to talk about this more in a little bit. But I was reading a report how a lot of companies, and I know before we started recording, Tyler mentioned Nike, are really rethinking their direct-to-consumer strategies, and for a few reasons. One, there's a massive amount of returns that retailers have to deal with e-commerce. That's a lot less of a pain point with in-person retail. The competition hasn't really ramped up recently. There hasn't been that much new retail construction. There is a lot less fraud when it comes to in-person retail. Sure, people do use like stolen credit cards in brick-and-mortar retail and things like that, but it's not nearly to the extent that you see fraudulent activity online. Someone comes and swipes a package off your porch. The retailer might have to, resend the items, and there's just a whole lot of pain points when it comes to e-commerce. I don't think people were really considering when they were calling for the death of retail. And so what happened 10, 15 years ago, when all these experts started calling for the death of retail, they stopped building retail, and it kind of created, it turned what's left into destinations. Everybody's town. I know, Tyler, you're not in the U.S. right now, but when you were in the U.S., I'm sure your town had a mall that was dying, somewhere within like a 10-minute drive. Had the mall that everyone used to go to. My town certainly has that, and a lot of the weaker malls died out. Very little construction has happened, and it's kind of created an interesting environment for retail. So, Tyler, I'll stop rambling. I know this was like one of our pandemic era stocks, I believe. I remember a three-way conversation between you, I, and Jason Hall about just how unbelievably cheap it was and how people were going to keep shopping at outlets. Now that the stock's up roughly 700% from the pandemic era lows, I have to imagine you're happy you made that investment. But what do you think of Tanger today?
Yeah, probably one of the more lucrative three-way text chains I think I've ever had in my life was discussing debt covenants at Tanger Factory Outlets in 2020. But yeah, a lot of things you were talking about, the retail story for the past 30 years in the United States is pretty interesting because on a net basis, there's been basically no growth in terms of total square footage. Yes, we all have seen the regional malls that probably had a Sears, like either a full-size Sears or like the smaller Sears tools and appliance store in it, accompanied with a J.C. Penney or something like that were these, we'll call them like Class B malls that maybe had like 3 or 4 other strip components to it that just, people stopped going to. Number one, those stores got really tired. didn't really like supply the market with what people wanted, and so a lot of those malls died. But at the same time, you were starting to see other places flourish, and factory outlet centers certainly were. Factory outlet centers like Tanger don't have the burden of the anchor store, I guess you will, that a lot of places that, regional malls and things like that had, that, with the Macy's or the name your giant conglomerate retailer that was prominent in the 80s and 90s that's dead today. They outlets didn't really have that, and so that was a beneficial thing to them. Also, it tends to be a I don't know, the last time I checked, it seems like a much more pleasurable experience relative to that regional mall that was kind of dead and dying. Certainly they've become much more amenitized over time, but and Tanger has been I would argue, one of the better ones in, keeping a fresh portfolio, keeping the existing portfolio well maintained, and kind of looking good and fresh versus, letting things kind of wither on the vine. So a lot of kudos to them for doing that. And their most recent earnings report came out, and here were the two things that stood out to me on that death of retail, I guess, faux story or narrative these days, is that this quarter they reported 98% occupancy at its entire portfolio. It's the highest in 10 years. So like we're out of the post-pandemic trough and back to 2014 levels of occupancy. On top of that, they reported 15% lease spreads, which basically means like when somebody is either renewing their lease or a company leaves and a new one comes in, the difference between that prior lease and the new one is about 15%, and that's with new and renewed leases. That's great. Like, we were seeing this in industrial real estate a couple of years ago. We were like, that's awesome. So to see that coming back into retail is a really strong sign that we're in a good period for them. And, for somebody like Tanger, that's great. And one of the things that surprised me the most when I was, looking through their earnings presentation too, is a large portion of their portfolio of leases comes due in 2025. I think it's like 25% of their leases. So we're hitting a renewal period for Tanger at a time when demand for retail real estate is at its highest. So I think 2025 is looking quite well for this business. And strategically, I think one of the things that has made me scratch my head ever so slightly with this company, and perhaps this was a pandemic related thing, but growth was kind of slow for them, right? They didn't have like a lot of development of new assets or things like that. And everything that they did was Tanger branded, but it appears that they're starting to just acquire not just like outlet styles, but the open air mall concept that's starting to take hold in other places. So it's not quite outlet like the discount style shopping, but it's that open air mall, premium retail sort of space. They have started to venture into that a little bit by making some acquisitions of independent malls, and leaving them with their branding, and it'd be like, so and so's mall, a Tanger company or something like that, which I think gives it a nice little growth outlet because, being a giant real estate company that it is, that's publicly traded, you have the benefit of lower cost of capital than your mom and pop or perhaps a regional owner of a private real estate or something like that. So I think it's an interesting growth lever for them to pull at a time when retail real estate is looking quite strong.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.